Hey everybody, how's it going? How's it going? How's it going? Another day in paradise. Let's see if I can share the screen here. My man Jack coming in here. There he is.
What is going on?
Well, another day in paradise. We might shut down a government and we'll see what happens.
Put it down. Yeah, shut it
I,
down.
I mean, Trump did it before, so let's do it again, right?
It's not going to have any impact on the market, but it's going to have a big impact on the news.
Yeah, I mean, it's, sky is falling, chicken little.
Yeah,
And and maybe
it's
the market kind of pauses here and waits. And one interesting thing, though, the BLS put out that they're not going to announce any economic news while the government's shut down. So the big jobs report and unemployment rate Friday may not come out. We'll have to see. Um, does it matter for us? I, I don't think the economy and the stock market are the same thing at all. So
they're not, which is why I don't pay any attention to the economy. I don't believe the numbers, and it has nothing to do with the market.
yeah, Jack, I found a cool tool here. Oh, let me see if I'm gonna have to refresh the page here to get it to work. Apparently, see if it'll load back up. Jeppy. Let's go back to S&P. TradingView added this cool little seasonality tool here. If we go look at the last 75 years of the market and put it in table format, this kind of is interesting, I think. When we look down here, coming in October, 43, it's going to be stupid here. There we go. 43 of the last 75 years have been bullish in October. And the average for that, we turn on the average button here. Average for that, about 1% higher, 0.88%. November, a little better, a little richer, 1.9%. And December, 1.4%. The last 75 years.
This is
Not,
thrown off a little bit, though, my friend, because September was up about 2.5%.
yeah, for this year, 2.9. This is, the average over the last 75 years.
Right. So I'm just saying, for September, the 75-year average got blown out of the water.
Yeah.
I'm not too big on seasonality right now anymore. I just think things are too complex.
Well, it's just, we have good years and we have bad years. Very rarely do we ever run at the average. That's the thing. That's why we have things like standard deviation that people don't necessarily understand. It's like even my technical pattern, when I talk about 45 candles on average, it has a very high standard deviation at 35. So to cover 99%, you got to have 3 standard deviations. So I don't have the standard deviations calculated on these, but they could show that it's a very wide range and the average is just kind of the average. So September actually kind of flat in here on average at 0.7, and October kind of flat at 0.8, just kind of the opposite. So they're kind of splitting the curve a little bit on the average. So when we have a bad year, it's kind of pretty bad, but when we have a good year, it's pretty good. Kind of all balances out in the wash. But looking down at November, December is where I've historically we have pretty darn good. I mean, 50 years out of I was looking more at the number of years that are good versus bad. September is kind of a coin flip. 33-41, October 43-31, and then we get into November, December, both in the 50s compared to 20 years. I mean, that's a little better than 2/3 of the time we have a pretty good November, December. So we're staring down a pretty good quarter, really, when you look at the whole sum. I just, I thought it was interesting. You can pull this in tighter if you just want to see the last 25 years, and everything starts to look really rosy. So about 8% on year, 8% a year on average for the S&P. The last 2 years, 24 and 23, and this year only 13. So if we just match the last couple of years, we could have another 10% rally into the end of the year.
Well, the great thing about what we're doing is we don't need a rally. The
Yeah.
market will go up, down, stay the same. That option premium is there for the selling. That option premium is there for the taking every single day the market's open.
And speaking of that, yesterday I talked about selling this upside call for today on IBIT. It already closed out full profit for
Nice.
me. Closed out the profit part. That was like picking up a $20 bill out of the street right there, selling that upside call at 66. I mean, I saw the premium there. I was like, that's juicy. I'm gonna grab it. 1 day exposure. I didn't even hold it open a day right there. Already cashed out. Looking at, moving out to Friday this week, maybe. I don't know. We'll see what happens.
I got a 63 naked put that still is riding.
So
I,
this is juicy stuff. Juicy stuff, everybody.
yeah, that's really good.
As far as
And yeah, eh, the opportunity is great in this thing all over the place.
yeah, we did have a rare end of the quarter expiration. This doesn't happen all over the place, but it did for Bitcoin. It does for um, the end of the year, right here at December 31st. So IBIT has these end of the quarter expirations that show up in here. They don't have the March 26th one yet, but it'll come, I'm sure. So it gave an extra options expiration in here for today that I took advantage of. That's what I'm talking about. I have 100 shares that I was put at 64.50 several weeks ago. I sold yesterday a 66 upside call with 1 day till expiration. Today I closed it out for a penny. Got it off the record. Boy, look at that volume, 25,000 right at 65.
Hmm.
All those calls going to go out for
Yeah, it's a bad proposition buying those calls. I found a real fat trade yesterday in Hood, but it kind of got away. I didn't expect it to rip. So the thing was around 120 something, high 120s, and I sold uh the 120 naked put for 660.
wow. And that was at the November, right? November 7th, you said?
November 7th. And that was just yesterday, and this thing's already changed so much. I'm just gonna leave
Yeah,
it
that's
be.
already like 30% of your profit right there. 1 day.
I didn't expect that. So I think this is still a good play, but I would pick a higher strike over 120.
Yeah, I mean, that's not even a bad trade there for 1 day. You might book that profit out and wait for another dip.
Yeah.
So
Yeah,
if
that
anybody got a piece of that, let us know in the chat right there. If anybody got a piece of that hood right there, love to hear it.
yeah, Hood's going to be a real good play here going forward. They're
I
rolling
do
out
see,
market betting, and they're going to have fees, unbelievable fees.
I do, for me, I see some potential topping out action just running on the last move. This thing has a tendency to kind of get over its skis just a hair. We could top it out here right around this 145 area, which is not far away at this point. Can it go a little further? Sure. Can it come up just a little short? Sure. We're in the vicinity of that 145. That could yield another pullback equal in size to these ones we've already done prior right here. I keep it on a log scale, so it kind of puts these in perspective a little bit. But that pullback right there, very similar in size to that pullback right there, which could be very similar in size to another pullback, which could take us back into the 70s.
No,
I'm just warning everybody. Like I've
that's
made
not,
a
that's not happening. 70s is not happening.
I've made a lot of money doing this sort of thing, Jack. I'm
I
just
know you have, brother, but I'm just saying this one ain't coming back like that. That's about a 50% haircut.
it is. That's why I warn about it. Like it's just all it is the same size pullback that we've already had
Right.
this year, even happening again right there. And yeah, it could happen. I'm just throwing it out there as a possibility. on the
It's
chart.
you've been dead on with this, but I'm just saying I'm going a different way. I'm staying long. I'm buying more. I'm selling covered calls against this. Yeah, I need to look at that. I sold some calls here. I got to check this out. That might be where is it right now?
What for Hood? Hood's at 138, 139, right
I'll
there, 139.
try to look at that. I don't want to get called out of this thing yet.
It's sitting right at 139, and the 200% extension of the last pullback is sitting right here at 143. So
Yeah.
all in the neighborhood.
If we look at Dennis says, when you sell the option based on your analysis, do you look at your yield before you execute? Yes. Yeah, definitely do that. Stephen collected 423 on a nice 116 call or a put actually.
And you talk about a 50% pullback not being in the cards like that. We did a 55 back in April. So
Yep.
it's done
Is
that size pullback before.
that on earnings?
Oh, I mean, that kind of started right around earnings and dipped into Liberation Day.
Yeah, I don't
Looks
see.
like it.
I see a pullback, but smaller pullback here.
Yeah, I mean, I'm just throwing it out there. My technical analysis pattern, I've done pretty well with it.
Yeah, no,
I'll
you
wait.
with it.
I'm going to wait for the pullback before I take any more actions on Hood.
Right. Yeah. No, you were right. We may be both right on AVGO. Let's take a look at that. I haven't traded that for 2 weeks.
Yeah, bleeding back down a little bit.
Yeah.
And Jack kind of thinks, you can correct me if I'm wrong, you think we'll probably get close to filling this gap, if not fill the gap.
Yeah. Yeah. It's had a lot of people exiting here lately. Ever since that gap up, it had a little gap and go, but you see now it's slightly below where that gap was, meaning it's going to continue to try to fill in that gap. 308 would be a little bit light, I think, but that could happen. I don't see it going much lower than that. No,
Now,
this
Jack, some people talk about market makers getting caught upside down on some of these gaps. Is that a reality of a thing, or is that just kind of like made up story?
no, that's a real thing. That can really happen, especially either way if you don't see it and you're not planning for it. I think yesterday the news was CEO selling shares along with another insider. And that's not necessarily bad news. Insiders sell for a lot of reasons, not just because they think the stock is going to go down. A lot of times it could be a divorce, it could be they want more cash, they're buying another mansion in Florida, they're buying another yacht, the wife just wants more cash. There's a lot of reasons why insiders sell. It's not always because the insiders think it's going down, but that did happen a little bit. And I couldn't blame any insider for selling. This thing's been on a tear, and a lot of their compensation is related to the stock and the options they get. So it doesn't bother me that CEO sold off some stock, but it got a little lofty, and that news about him basing his salary on their revenue from AI, that really sparked that gap. But since then, it's not holding. And that goes to show you that good news can make a stock go up, but it can't make it stay up.
Yeah, that's absolutely like you've got to. It's a lot of people get caught in this too. Like, maybe that was a trap for retail traders.
That could have
That
been,
that
yeah,
that gap up.
they can do all they can do to hedge their position. They really don't want to be long or short. But if that stock gaps up and they get an order, they got to fill that order. So they're either going to short it to them and wait to cover, or uh, short it to them and cover and take a loss on that trade. They take losses. They don't make money on every single trade, but the majority of them they do well. And again, they get caught when, or can get caught when there's a big unexpected move. Nobody could see a news nobody could predict a news announcement that the CEO is going to base his salary on AI. That caught people by surprise. That caught the market makers by surprise. So they could have taken some temporary losses, but then worked themselves out of it. And you can't predict when news comes up like CEO is selling. So, they can get caught on news. But when there's a predictable event coming up like earnings, then they're going to stretch out the pricing so that they're not going to get caught. And then, they're going to make a fortune on that.
Yeah, so one of the interesting things we see here is most of the insider transactions are actually sells. There's 200 million sells for only 1 million buys in the last little bit here on AVGO. So, um, that's insiders kind of tipping their hand. They think it might be a little lofty and might come back for a better deal. That's one way you could read it. Another way is, those insiders sitting on profits and they need to cash out because a lot of their compensation is shares. So,
Yeah. Yeah. The question was why November 7th? That just worked out good, better for me this late into the month. I needed a couple extra days, so I won't be able to cash flow in that stock in October. But when that expires November 7th, I'll just do it again in November. So that worked out. The dates worked out better for me, is why I picked November 7th, and the money worked out better. Wrong. Gomer wants to know opinion about all the Tesla block buying on the Tesla. We'll have to talk about that here in a minute.
yeah, I mean, we were talking about it yesterday, and it's kind of a bullish indicator for me. But I have something that's even bigger than the block buys that really tips me for bullish. Um, Now, bigger than all that though, Jax, I showed you something last night or yesterday evening that I think's worth at least casually thinking about. We just talked about this, or I talked about it on the opening playbook show we were on part of the roundtable a little bit ago. I saw yesterday come through in two orders about 150,000 contracts of VIX out to November at the 32 strike right up here. That to me says something's up. That was 12 million in premium. We were talking about big premium orders. As a market maker, Jack, something that far out of the money, that big, how would you think about that if you saw that order come through as a market maker?
Um, I would hope that someone else would fill the order and not me, um, because you know the guy's going to have to wait. You can't fill a $12 million order like that. Like every other trade we do, it takes seconds to fill. That ain't going to go like that. For one, if the market's, let's say it's liquid for a million at whatever price, 12 million, it's going to push it up or down uh, to the actual price of the option. There's no other way to do it. Uh, an order that big is strange in that it's not on an individual stock, right? If it was on an individual stock, then you would easily say, hey, somebody's put a $12 million order down, like we see on Tesla block orders on those options. Somebody knows something about that individual event tied to a stock. News is coming out, whatever. They're front running it, illegal inside information. But when you get this on the VIX, that's a massive order. Again, that's not speculation. Somebody has to know something, but what is it that they know? What is it that they have planned in there? They're betting on extreme volatility, right?
Yeah, because that's 100% higher on VIX right
Yeah.
there than we are right now.
So what would 100% increase in volatility do to stocks?
I mean, that's a lot of more premium for us to sell. That's what it says to me.
I don't know what this guy thinks is going to happen. I mean, that would mean, I don't know, that would be a melt up. That would be a black swan down. He's just betting that it's going to get more volatile. He's not betting up or down, right?
Well, generally, though, VIX only responds to moves down, at least in recent years.
Yeah.
So that generally means we're going to see some sort of rapid pullback for him to be able to cash out. Now, it could only pop a couple bucks and he could double his money. You never know if, we could see VIX only go up to like 20 and he'd be able to double his money. That's entirely possible scenario here. So you never know what his actual play is. He may not actually be vying for it to go to 32. That may have been his best bang for the buck, whatever tool or calculation he was using. So different ways to read into it, but one way or another, when you buy calls, you need something to happen, and you need it to happen before your expiration right there.
And his is
Now,
November. What was the expiration on this?
it's the normal November expiration
Third
right here,
week of November.
November 19th in the morning, 32 strike calls right there. You can see the block. How do you get this? If you're on Tasty Trade, you can right click on the bid or the ask and hit view option chart, and it'll throw you into the actual price chart for that option right there. As Jack said, this was designed for traders. This kind of thing makes intuitive sense for me to pop in here and look at this. And you can see that giant 140 something thousand, and there was another order right beside it that was much smaller that completed the 150,000 contract
I'm
size.
surprised it got filled, really.
And that was filled in one go. And this is a 5 minute chart right here, I believe. Yeah,
Yeah.
5 minute chart I've got up. So they filled it in less than 5 minutes
Yeah. Now,
right there.
so obviously the market maker wasn't long that much, right? How's he gonna get out of this? He's gonna get out of this. If he shorted it to him, he's gonna get out of it just through it seeking its natural level. And that's what a market maker wants. They don't care if the stock goes up or goes down. They care that the stock reaches a level that yields the most volume because they're able to buy on the bid and sell on the ask, and that may be a couple pennies difference, but if it yields enough volume, that couple pennies really adds up at $12 million worth. We'll see how that shakes out, but he's probably still trying to work his way out of this trade or get covered.
Now, Jack, that's uh, maybe somebody wants to play a piece of this, and I want to go through it real quick. A way that this can happen. I want to explain it in more depth than I did on the roundtable there. So, with 100% potential upside, if this scenario were to play out, that's 100% upside, right? That's a pretty crazy move. Pretty crazy move. But how do we take advantage of crazy? We do something crazier. So, what can we do? There's an instrument, UVXY, 2x leverage. So you could just go buy this. Buy it for 10 bucks. You buy shares, right? This is one way, first way to play. You could just go buy shares. You get 2x leverage. If VIX goes up 100%, because this is an ultra, and ultra means 2x leverage, that means this goes up by 2x. That's a 200%. So this $10 can go to 30 potential.
So it's funny you laid that out. Dan Rose just asked if we were to make that same trade, but smaller, how would we do it? This is exactly how you do it, Dan. You'd
So you
buy.
could potentially, essentially triple your money if that went, and you're not going to be limited either. If VIX were to, for some reason, go up 200%, and the guy made a crap killing of money, this goes up 400%. So now this goes from 10 all the way up to 40, possibly higher, right
Yeah.
there.
Yeah, that's a good trade. You can get into that thing for $11, right? Just one share. Uh, so yeah, that's a good one. I'm going to do that one here when we get done.
And see, this could come all the way up into the 50s even if we went 400% right there.
That'd be crazy.
Now,
So,
other ways, like we could actually, I recommend this for a very, very small position. But if you're going to do this, if you're going to do this, I recommend a very, very small position. We could actually explore this in the options, Jack, and discuss a few scenarios here. Now, I flew out in particular to the October 24th. Now, remember, this big traders out here to November. Those November options, a little spicy on Ultra VIX here. Now, I'm just kind of playing the government shutdown. That's the event I know is kind of happening here. You could pick up these 14 strikes right here for 50 cents a piece. And if we got a big spike up into the 30s, those would be 16 bucks in the money. Yeah. And Jack's reaction, oh, that's risking a small amount of money for a potential large amount of money right there.
I rarely do that, take a directional trade like that. There has to be a really compelling reason, and this is pretty good.
Now that's just a small, like, I'm only talking about a few contracts. I'm, 100 bucks, 500 bucks, two, three, four, five contracts, maybe 10, nothing, anything going any bigger than that right now. There's no reason for that. All right. There's no up and
Me,
coming big crazy event that we know of that's going to cause market chaos. Government shutdowns usually not chaos. So this is one of those things you got to be careful. Now, if you wanted to play out to November, I talked about these being more expensive. Look at that. That 14 is now $1.30
hmm,
just for a month more time. That's a little rich for my blood. But if you wanted to take advantage of this and still catch the upside move, look at this. The strikes even stop at 27 right here. But you could potentially pick up a 12 strike. You could go long a 12 strike call, $1.60, and then sell that 27 strike, give you a $15 upside, the difference between the strikes. Sell that for about 57 cents. So roughly you're in it for $1 and you got 15, $14 of upside gain. $15 minus the dollar you cost you put in. So you could get 14x return there. And it puts you out to the November strike where the other guy is sitting with this $12 million.
perfect.
Your risk here is the dollar, what you pay. On the 24th one, the risk is whatever you pay. If you put $100 into 14 strike calls, that's your risk. So these are a couple different ways to potentially play the same move, either with shares, straight calls, or a call spread to the upside. Now, if you go with the call spread out to November, anything over 27, you're kind of capped out. You're limited. So that is the downside play to that, but it does reduce the cost being able to play out here because that 50 cents mark out here in November is all the way up here at 27 to get in for 50 cents, the same 50 cents. And it's not even that low. So there's a big difference between the October and the November right there. All right. And I can write them out while Jack talks for a minute.
Yeah, write them up. I got to answer. Earl has a Earl, you'd have to talk to the broker about that. If you have one credit spread on at 177.50, 175, then you put another one on where you sell the 180 put and buy the 170.50. You'd have to talk to the broker to see what that conflict is there. I think you should be able to do it, but they might be looking at you're using that 177.50 twice. And so I don't know how that would shake out, but I would call your broker there, Earl. And Hal, I use market, I use limit if I'm gonna put an order in um, on a covered call, for example. I'll just use market. I've been getting better fills at the market. With the limit order, I put a limit on a net credit. That's the only time I really use a limit is I want a limit on that net credit.
There we go. I wrote out the three different ways you could play this move with UVXY. And I mean, Jack, we've probably, I don't know if you've ever heard me talk about the actual trades I made during COVID, but I actually have screenshots from back then. I wasn't even a guru back then, but I have screenshots of the moves I made. I was selling on any pop, I would liquidate, and then any drop, I would buy back in, and then liquidate and buy back in, and liquidate and buy back in. And the ultimate move here on March 18th, 2020, I closed 140 VIX 55 strike calls that were expiring that next day for $20 profit per contract.
Wow.
Right there. So when the opportunity to trade directionally shows up, I am on it.
Yeah, yeah, that's good. That's good. This is one of the rare times that we take a directional trade when it's just so super compelling, number one, and number two, the ROI is outstanding, then it's worth taking a shot. but I wouldn't put the amount of capital at work on a directional trade that I put on an income type trade. I would, way less percentage.
Yeah, and if this starts proving it out, like we get a big pop up here at 15, 16, I might close it out. And we get a pullback, I might add back in. Because when we just look at what happened back in April right here, look at this move. We popped up, we did an initial run, then we pulled back for a couple weeks. Then we moved up, then we pulled back for a few days, then we moved up, then we pulled back for a day or two, then we moved up, then we started to churn our way back down. So you never know which one of these pops is the actual end. So I like to reset my risk on these pullbacks. And the risk reward gets out of whack when we get a big pop, especially in options. You're leveraged. And
If
I
you
like
were
to
to
take
buy,
that profit off and reset the risk back down to normal level.
if you were to buy this 14 strike call, would you put a good till cancel to sell it immediately after that, or would you just watch it and ride it?
Because of the chance that it just does something absolutely insane, it's a very small chance, but it is a chance. I mean, you look at these prior rips, when it rips, it absolutely rips. Back here in 2020,
Man,
I don't like to cap that upside potential on a call. Now, if I'm playing a very calculated move, I would. And this thing was never at 14,000. The reverse splits push that price up there crazy like that. And they do periodic reverse splits because this thing decays because VIX doesn't trend. The underlying asset. This is not a long-term hold situation. That's why I'm playing only out to October with my long call. This thing's going to continue to decay if we get no big pop in VIX. This thing will continue to decay. Says this, what they call a decaying asset. This is a risky, this is why playing options on this, extremely risky to do. High risk. That's buying shares would be much better. The downside is $10 if you buy shares. So the downside on your options, whatever you spend. That's why I don't get in any kind of credit spread or it's kind of a lotto ticket type thing. Like if the crap goes down, the insurance payment pays out. This is kind of insurance, if you will. You don't buy your car insurance expecting to collect on it next month. So,
and again, something you might put 100 grand on a trade, that would mean you'd probably put in like 5 grand on this trade, right?
yeah, if
Way
you were
less.
trying to protect, I'm protecting probably upwards of 75 grand. I put like $500 on it. So, I mean, to each their own. I'm not saying that that's right for you. That $500 I put on there may vaporize. Like it may just be gone. So, manage your own risk.
Yeah. But that's the thing is when I'm doing an income trade, I'm not going to be as risky as if I'm doing a directional trade, right?
Oh,
So
absolutely. I would never do an income trade on UVXY.
no,
Never.
that's false. If you ever buy a call, you just got to be willing to lose 100% of it, or at least 50% of it. You don't want to use a stop order, but you want to use a mental stop. But I
Now,
never call or a put without being willing to lose 100% of it.
there's a question of why would I play this over just playing VIX? Now, UVXY gets me that 2x leverage on top of the options leverage, which is another 10x basically. So really, I'm getting about 20x leverage bang for my buck for the money I put in at risk in this stock right here, or in this ETF. Now, if you just went straight to VIX, you get about half of that at 10x. But there's another caveat that happens in VIX if you've never played it before. This is real, like this is where it gets a little bit mind bending. So if you're not in the right expiration for VIX, like if the volatility event happens in October and you played in November, your November options may not respond. This is very like I think it's because this is tied to the futures and the VIX futures contracts roll over monthly. I think it's a side effect of this, particularly for the VIX instrument. But VIX futures are directly tied into VIX, the index. And if your volatility event, I saw this happen back in 2020, the March, if you played April, there was no money to be made. Like it didn't even really respond. Like the market was pricing that everything was done by April, and I could see it in the options chain. March was the place you had to play during COVID. And if you had played in April, you didn't make any money because it didn't really move. It was the craziest freaking thing. So if this volatility event happens in October and you play out to November, you may not make any money. It's not like Apple where this one goes up and this one goes up too, and it's always higher price. That's not the way VIX works. So it's a caveat to VIX. It's very unique in that aspect, and it's very difficult to play. So I'm not encouraging anybody to get into this. You may want to paper trade through this event so you're ready for a next one, because there's always going to be a next one.
The VIX is tough because it's just a volatility index. That's it. It doesn't really track a stock. It just tracks volatility. And that can be a tricky thing.
And
Very,
almost every volatility event lasts shorter than a month before we come back down to the resting rate. Now, the resting rate can change over time. Like after COVID, we kind of reset the resting rate to a higher rate that declined here. Grab my pen tool here. So we kind of bled it down for a while. Then we kind of rose it up a little bit. Then we're bleeding it down more. So every one of those spike downs is kind of the resting rate in between volatility events.
have you ever heard of the strategy where if the VIX is over 20, you sell premium, and if it's under 20, you're buying?
Yeah, it's interesting because the long-term resting rate of VIX on average is basically 20.
Yeah,
When
I
you
know
look at the
that's a weird number that, yeah, if it's below 20, you're buying calls and puts. If it's above, you're selling. I don't think it's just that easy. I don't use the VIX, just to let you know. I don't know that it's not broken, but
Yeah, there was what they call Volmageddon that happened back here, right in here. About the time we shut down the government, there was something called Volmageddon that happened, and a lot of short VIX instruments broke.
yeah,
You could sell every spike in VIX right up until the day that that broke, and there were ETFs that got liquidated, several of them. Like we talk about, the potential for an ETF to go into liquidation, like when we were talking about Tesla and MSTY, all the yield max ones yesterday. There were a bunch of volatility ones went into liquidation right there. And it was nasty if you were caught long in options. I know some of my friends got caught long in options and blew up some accounts because they couldn't do anything. Like they were stuck in the liquidation. So
rough spot.
always a possibility. Anyway, VIX is a unique critter.
Is back in the day, everybody I knew used the VIX. How they used it, I don't know. I've never ever used it. I've never seen it giving me an edge. Maybe I just don't know how to read it, but I think volatility is kind of unpredictable. That's why I'm shocked this guy's put such a big bet down on volatility picking up.
Yeah, I mean, maybe he's got the timeline for what's about to happen between Ukraine, or maybe the price of oil continues to drop out like it is, and more missiles fly in the Middle East.
You could
And we're
bet on
seeing
all
this.
that.
I have a strong theory, Jack, that if we see oil drop down below the low we already had over here, we're going to see more missiles fly.
Bringing it back up.
That's what happened right here. We saw this price dip in here. What happened? Missiles flew. They know how to move the price of oil. All
No,
right.
nobody knows how to manipulate a market better than all the oil players, right? They manipulated the oil market back when nuclear power came on. They manipulated it through public relations, making it look not safe. Yeah, they want their money. Below 60, they're going to do something to get it above 60.
Yeah, there's a lot of players that need oil to be up here at the minimum. That's kind of we're sitting at their minimum. So if we start dipping into the 50s,
That's way too low,
more shenanigans are going to ensue.
is where it's at. And in just full disclosure, I'm long a boatload of Exxon Mobil.
I've got some full disclosure. I've got some SCO, which is a leveraged play short oil right here.
Wow.
Ultra short oil. I've got some of this just sitting, waiting for a little pop, and then I'll be out.
There you go. Yeah, they'll make it pop.
So this is short oil. So when oil dips, this pops, and then I'll be on this one like white on rice.
This
This
is
is leveraged long oil right here.
this is this just goes to show you there's an ETF for everything, every single thing. And I read today that these crypto ETFs that are coming out, Solana and the rest of them, Ripple, they don't need to go through that regular approval process.
Yeah, they streamlined this whole thing last week or the last 2 weeks.
They
So now
streamlined
they
it.
can.
Yeah, you just put the paperwork in. I'm tempted to launch my own ETF just because they're so popular and the fees are so good. I could charge a quarter of 1%. If I get enough assets under management with that ETF, it'd be,
Heck, man, we could charge 1%, Jack. I mean, look, look how many of these ETFs charge 1%.
I know, we only use 1.4.
Look at this one, leverage 1.4 on this one.
Well, the hedge fund days, it was 2% of the money under management. That just, you took that and then you took 20% of the profit. That's pretty rich. But when you're just doing 1.4% on unlimited amount of money, yeah, the fees can get pretty big, which is why I'm long BlackRock, right? All the fees flow to BlackRock. They all end up at BlackRock.
And here's my technical
BlackRock's
pattern at
making a new high.
here's my technical pattern at work right here at Tesla. We topped out back Monday, September 22nd, last week. Made a dip right here, popped up, hit the target, pulling back again. We're at support, and we might go again. Now, the big thing coming out this week, by the end of the week, their delivery numbers for Q3. Today is the last day of the quarter. Tesla's delivery numbers coming out, and that is probably why there are a large number of calls flying through in the last week or so.
An abnormal amount of calls flying through. Really
And
crazy.
just to go into some of that, let me pull up the option chain over here. Looking at October, I went through this a little bit on my morning show. Not too crazy, but 20,000 contracts at the 500, 17,000 at 550.
That's
We go out
pretty.
to we go out to November. This is it gets crazier, Jack. 60, almost 70,000 contracts on 500. And you go up to 550. I mean, not a big one for November. Let's see, somewhere in here there was a giant one all the way up at 880. I think it was in January. Then we fly out to December. It just gets wild. Almost 30,000 contracts at 500 in December.
That's an insane amount of money, considering what they paid. What was the price of that 560?
Yeah, the 500 was $27 a contract for 30,000 contracts.
Insane, man. That's insane. $2,700 for one contract. But
And you're going to do that
piling in,
hundreds, thousands of times. Look
all
at
this
this.
piling in. I know. It makes no sense, man. When I look at this like
40,000 contracts at 960 strike for December.
and go low,
What?
go like look at the 300s, like you know, go way down in price. And it kills me how big the volume is there too. Look at that 260. 260, that's 12,200. This is what I don't get. Like go even lower, right?
Yeah, I mean, people are playing deep in the money. I just There's so much money flying
100
on this right now.
150 strike, the 240 strike. Look at that. Yeah, I know there's so much money in that right now. The market makers in that got to be loving that because they always get a chance to cover.
But some of the craziest ones are this January strike right here. Look at that, 25,000 contracts, 400 in the money.
Boy, I tell you, if this thing doesn't pop, that's going to be one of the biggest options wipeouts I've ever seen.
And then we come up on the upside here. This is absolute insanity. 32,000 contracts at 960 for January. 15,000, almost 16,000 at 900. Come on down. Where was the big? There's a big one in here somewhere. Let's see. Trying to find it. At 30,000 at 500, 10,000 at 550. They play the round numbers, 26,000 at 600. And those cost $1,600 a piece.
It's a huge bet on an option that could expire worthless.
And I mean, look at these buys. I mean, that's people loading up.
People loading up.
I,
That's got to be institutions. And some of that, I don't know if you could say somebody knows something or this is just straight up speculation.
I have a hard time with that, Jack. But these are almost all buys because the open interest keeps ticking up every day after the volume numbers come through.
Mhm.
So these are just insane bets going out there. That is tons of premium. That's why Jack and I are premium sellers a lot of
I know.
time.
Look at that. Man, that's awesome.
So again, how do you play this? Jack has a beautiful trade that he puts on every week on Thursdays that takes advantage of all this crazy option selling. And I still got mine open, rolling. I went a little more aggressive than a 50% for my close. We'll see if it actually pays out.
It
I'm
probably will. Dennis asks,
I'm way out of the or way in the money, I guess you might say, at this point. So we'll see.
Dennis says, do you like secured puts on Tesla? I don't. I don't because the capital requirement is just too rich. You know, uh, I like to do a lot of calls uh, or a lot of naked puts, but that's going to tie up way, way, way too much capital. And there's a better play, right? Right here at TSLL.
This is the way I've been playing. Now, again, leveraged instrument. This is a 2x leverage. Be careful. Playing options on a leverage instrument is a recipe for disaster. This is a very capital limited, only puts a limited amount of capital at risk in this instrument because leverage can cut both ways. And when you 10x it by playing options on a leverage instrument, it is a derivative of a derivative. You are just putting more money at risk. But that said, I've made a crap ton of money selling puts and upside calls on this right here. And even more bullish to me than those large option flows that we're seeing on Tesla is the fact that I had upside calls sold against several thousand shares of TSLL and got called out 2 weeks early.
Well, that's a sign of strength. Somebody wanted it, right?
That to
Somebody,
me is more bullish for Tesla that the leveraged instrument here got called out from me at 2 weeks ahead. So I am aggressively selling puts right here against this thing.
awesome. And John says, what kind of trade do you put on Thursdays? Well, if we get the green light on Thursdays, we put a debit spread on Tesla.
Yeah, so we'll flip back to Tesla really quickly. We can cover that really quickly for those that haven't been here. Maybe it's your first show. If it is your first show, let us know. Jack and I love to talk about this stuff.
Mhm.
So you fly out, you know, we're kind of in between, but you fly out to the next expiration. If there's a green light, which Jack's proprietary system, he teaches you all that in the master class for the Tesla payouts program. But you come in here and you buy one that's in the money, and then you sell one that's out of the money. Usually costs around $1.20 to $1.30, roughly.
So that'd be $120 or $130. And Otherwise, you'd be paying $1,640 for one contract. Whereas if you buy a straight up call, you're spending a fortune. If you're doing a debit spread, you're lowering that cost by selling the next higher strike. So instead of paying $1,650 for one contract, you're paying 120 or 130, and you still have tremendous upside. And you don't have to wait months, right? This can all happen in days. So if we get the green light this Thursday, that will be for the next Friday's expiration, not the next day, but the following Friday.
Yeah.
So yeah, this is gold, man. This is just unbelievable.
And typically, we don't target the full difference. This is a $2.50 difference in strike. That's the maximum the trade could be worth, which is basically a little over 100% gain, depending on where you fill here. If you filled at $1.25, that'd be 100% gain. But instead of going for that, Jack likes to go for only a 50% gain, and it ups the win rate
Tremendously.
tremendously. That's a good word, tremendously.
No, it really does. I mean, you can go for 100, but you can get into a trade for $120 or $130 and potentially make 50%. And this thing's
Well,
9 for 9. It had one loss before that, and it had a whole big streak of winners there before that. So I love this trade.
the trick here is that price on Tesla tends to do this a lot. And this thing, you could book your 50%, and then by the expiration, you end up down here, but you already made your 50%, and that spread, if you had held on to it going for 100%, might actually end up losing everything.
Well,
So,
what's crazy is if this thing makes a 2%, 1 to 2% move, you could make 50%. That's the
yeah.
goal. Is that you don't want Tesla to go up 50% for you to make 50%. It just needs to make its normal 1 to 2% plus move, and you could make 50%. That's the way this option market is rigged, is beautiful for the guys playing these long debit spreads.
And the average true range, daily average true range right now is $15 on Tesla. $15 in a day. That's the average it moves. Like I think that's more than 2%. Let's
Yeah,
see.
that's all.
$15 divided by 435. Yeah, we're at 3% and 3.5, almost 3.5% move a day, every day.
That's yeah. No,
And you
wrong overall.
just need a couple percent move to pay out.
Why wrong Gomer? Why do you say, dang, too bad I can't play those? Why can't you play a debit spread?
Because he's a Tesla employee.
Oh,
He's one of my members right there.
yeah.
He's not allowed to short any options against Tesla.
All right. Well, Dennis, if this is Thursday, if we come up on this Thursday and we get the green light, that will be for that'd be like 8 or 9 days out for the following Friday, right? That's all we need, because if we're in this thing for, we go in for Thursday for the next Friday's expiration, that's all we need, because we're just going to get that 1 to 2% move. If that happens anytime during that window, then we go off for it. So what is so strategic about Thursdays is just the data. Like we had about a 60.5% win rate when we were doing it the old way. Then when we added this Thursday green light, it has to hit a whole set of criteria that upped the win rate to, I don't know, what is it now, 84%?
Yeah, something crazy. We did a whole presentation on it last week.
So
Um,
this Thursday green light, John, it just upped the win rate from like 60 to 80%. So we're sticking with that. And Thursday isn't a push, right? We don't force this on Thursday. I don't force any trade. We have to get that green light or we don't do the trade. But typically we're going to get that 3 to 4 times a month, which is what we need. So Dennis, that Tesla, if you're doing that Tesla payout program, that's Thursday at 2 o'clock. If we hit that green light at 2 o'clock, then we'll give you the order, which is buy one, call in the money, sell one out of the money. And that's going to lower your entry from 1,600 bucks to like 120 or 200 bucks. And really simple to play. And then you're going to take your debit, whatever that is, and add 50% to that. And then that's your good till cancel. You're going to put that order in to sell immediately, because a lot of times, and I don't want you to expect this, but a lot of times we're out of this trade the next day. So if you get in on Thursday before the close, you might be out Friday or Monday. And you can
And I
get in.
believe I
You're
was gonna say
fine.
I believe Rob in the chat there made 16 grand when he closed this out yesterday.
I know. It's just been pure fire. Way to go, Rob. Yeah. Yeah, Dennis, I have a ton of training on this. You can actually watch me do the trade. I love doing it. I do it live. In the master class, you could see me do it live. You could do exactly what I do. And this is cool because it is a bit of a directional trade. Normally I'm a seller of options, but here I'm a buyer. And I love the fact that you can do it with very little money. Although when I do it, I want to use 5 or 10 grand because this return has been so phenomenal. But you can get into this for little money. Debit spreads are great if you have the right stock. And Tesla, of all the stocks out there, it's weird that this has the most options traded on a stock, even when the stock itself isn't the most commonly traded stock, the options are. And that's the beauty of Tesla. That's never going to go away. Uh, just because it's so controversial and he's constantly in the news. And it's just a great options trade. I love trading this one. This is the only stock I don't really use for income type trades. I'm not long. I don't do covered calls. I don't do credit spreads or naked puts on it, but I do that debit spread trade, and I love that.
We're not going to do a sales pitch here for it, but if anybody's interested, I'll drop the link right here in the chat. You can go check out that, or you can call the team. I'll drop that phone number here. If you really want to get a piece of this, that's not what we're here to do today, but if we piqued your interest on that, you can either go to jackcartertrading.com/Tesla or call the team 904-706-3534 right there and ask for more information if you want to call and ask. So they'll get it to you.
It's been fun. It's been really fun. I don't do things that make 50%. You know,
Yeah, usually you're stoked about a 20% return in a month or so.
I did a credit spread this morning on Nvidia that was a little over 10%, and that expires this Friday, so that's 3 days. That gets me excited. That's good for me. 10%. I got a naked put on Hood at 28% for the month. That's my kind of stuff. But to make 50% overnight or in 2 days or in 8 days, that's the biggest return I get. But I don't put as much money in that trade as I do the other stuff because I think it's inherently riskier. But I do love doing debit spreads on Tesla.
Yeah,
Nothing else.
and like I said, I've been playing that TSLL and just pounding the crap out of it,
I'm
basically.
going to do a little bit of that too. Yeah, that's good. That's got a good price. Yeah, I love this thing.
And the beta right now, 3.7, basically. I mean, the premium is just juicy. I'm probably going to lay off as we get into the 15th, which is Tesla earnings coming up on the 15th right here. I'll probably ease back on my aggressiveness as we get into this date. I don't really want to hold a bunch of these through that necessarily right there, because who knows what's going to happen. No, all my long positions I'll probably hold on to, but I'm not going to be super aggressive right there.
Yeah, yeah. It's fun. It's a very fun, so simple. You get the green light, you already know what to do if you watch the master class. It's just a piece of cake. So it makes Thursdays exciting. You could get in Thursday from 2 to the close. You can get in anytime Friday. And then we're looking to get out as soon as possible.
All right. What's next, Jack? What do we got next? I believe
Not
you had
sure. Do we have Sarah or Jared on here that's gonna give us a little preview?
I think Sarah's got a slideshow lined up. She's going to play for everybody.
Okay. Good
I'm,
stuff.
I'm cute and ready for you guys whenever you are.
Now, Sarah, one thing I got to tell you,
Yes.
we need more cowbell.
More. I will get you cowbell tomorrow.
Okay, thank you. Let it roll, baby.